Hey, everyone. Good to have you here. Welcome to TechCon SoCal afternoon session. We are the best fintech panel you'll ever hear here at TechCon SoCal, and we're happy to have you. So give a hand for our panel. My name is Neil Bloom. I am a serial entrepreneur and investor. I run Interlock Capital. We are an exited founder and operator focused fund where all of us have run different kinds of tech companies, and now we're investing only in areas where we have subject matter expertise. One of that area is fintech because we have a big network of fintech operators in our group. So I'm excited to bring some friends and old and new friends here to have a really good conversation. I think it'll be a conversation that, of course, like every conversation had here, will have a piece of AI, but because of actually the skill sets of this group, who all of them have got both building and operating and investing kind of backgrounds to them, I think it'll be interesting to get a few different perspectives here. Sound good? Yep. Quick show of hands, who here is starting a startup or is an entrepreneur? Okay, who here is on the investment side? Okay, who's supporting startups in a variety of ways, whether ecosystem, service level, building big enterprise tech? Okay, cool. Sounds about right for the audience here. And feel free to come up here as well. I know this is going to be quick. Are you going to give us a time check or anything, or is it just kind of on me?
Yeah, but I think you guys will about 35 minutes, I think.
Perfect. Well, why don't we jump right into introductions here, starting right here with my left here. We've got Naveed Anwar, Managing Director, Global Head of Digital and Data Platforms at Citibank.
Well, thank you first and foremost for showing up over here, because we appreciate finding the basement, finding the first room, and seeking us out. So my name is Naveed Anwar. I'm part of a services organization at Citibank. And what that means is really around how do we measure and transact in treasuries. So it's treasury management system, capital trade, as well as liquidity management for large corporations, public sectors, commercial banking, fintechs, and FIs.
My name is James Burkett. I'm a co-founder and partner of an investment firm called Florin Digital. I'm the only U.S. partner, so we have offices in Austin, Texas, where I'm based. We have an office in Paris, France, and then Amsterdam in the Netherlands. And so we focus on investing in blockchain technologies and crypto. And so we will touch anything that relates to that space. Previously, I was a financial services investment banker for about a decade. Worked at a number of fintech companies in a CFO, had a strategy capacity, worked at a SPAC, and have been a professional investor now for about 5 years in the space.
Hi, my name is Shane Scaff. I've spent my career building SaaS B2B enterprise platforms. So my first company I had called MaintenanceNet. We had a platform that automated how companies manage and transacted annuities. And we sold that to Cisco back in 2015. I incubated a few other companies between 15 and 18, which is when I started the company I'm running now, which is called Bluma. Bluma is a company that has a platform that automates commercial real estate loan origination and portfolio auditing. So we're selling into really commercial real estate lenders, commercial banks, private lenders, debt funds, and insurance companies primarily. And happy to be here with y'all.
Hi, Kerry Ransom. I wear a few hats. Primarily, I manage a strategic investment fund for the community banking industry called BankTech Ventures. We have community banks all over the country that we've pulled together, and we invest in next generation solutions to make community banks better, more efficient, more digitized, competitive, so they can stay independent and in business. And been about the last decade mostly in fintech. And I've done a whole bunch of startups that I've played any role. I've had every job in a startup, from founder, co-founder to first of everything in it, and love helping founders get things kind of off the ground. So still do quite a bit of that as well.
Okay, you can tell we've got deep background here, a lot of banking tech, as we've uncovered, both either now or in our past. So that'll probably come up a lot. Wanted to kick things off, maybe kind of, especially when we talk about banking tech, as we kind of heard, we were talking a little bit before, that AI and banking are just like kind of incongruent to each other to big banks. Maybe we start there, Shane. Like, what are you hearing from your customer around hot new technology versus what the customer is asking for, kind of maybe at a macro level?
Yeah, I mean, so my experience, most of my background is not in selling into banking or anything around finance, quite frankly. So I've been pretty shocked. It's a very slow-moving space, and I think at the consumer level, I would be a little bit on the scared side of what's in place at some of these financial institutions. The propensity to adopt and innovate is there, but I'd say the culture is not, right? And so that really needs to shift from a macro. In fact, I was asked this question, I think it was in an interview a few weeks ago about, what do I see that's happening in the space and like the challenges. It's really easy to go to, we have massive inflation, interest rate volatility, and all of those kind of macro events that are happening right now as we live and breathe. But I think the biggest problem in banking is really the culture and the slowness by which those institutions tend to adopt new technology to make all of our lives better that do business with them. So that is one thing that I see actually is starting to move. It's been wonderful talking to this guy here because I think they're certainly at the top tier of those movers. So
Yeah, why don't we hear straight from a bank? A little response to that.
I will agree with Shane that the hardest thing to do is bring about a cultural change in an organization, right? It's easy to hire people, fire people, but cultural change requires vigor and propensity in which you have to just keep pushing through it. So at Citi, our mantra is that, look, we happen to be a bank, but we act like a technology company. And the idea behind that is that how do we take our old processes and replace them with new processes? And that doesn't mean that everything has to be built inside the company. And that is why we look at partnerships, we look at fintechs, we look at solutions which are available in the market, because you don't end up with a budget which is going to be endless, and you need to be able to move fast. But moving fast requires two things: making sure that you have the right risk and controls in place, but then also how do you innovate in a regulated environment, right? Because it's easy for a fintech or a big tech to come out with innovations every week or every 2 weeks or every month. But in a regulated environment, you have to be able to answer the questions to the regulators who are really looking at this with a very fine tooth and comb. And do you have the right controls in place? Is this data that you are actually moving inside the system, is it secure? Are you entitling it to the right person in the organization? And is it of quality? In the past, in the banks, it has been really a vendor-driven software culture. Now, most of the banks and big banks are moving towards hiring software engineers inside the company. So that is also a cultural shift, which is like you're not building software through contractors, but you're building the software inside the company. So hence, you're closer to the stack, as well as getting rid of the legacy systems as well.
I'd kick it over to Carrie, who you run a fund full of banks, in a sense, who are looking for innovation, right? Or take us through a little bit like what they're asking for in that response.
Yeah, I mean, I think we have a combination of some who kind of know what they're asking for and a lot that are almost looking to be told what they should be asking for. And it's nice to have the combination to some extent. I mean, one of the mantras we use, as Shane said, it's really hard to sell into this industry. Part of it is, one of the things we say all the time is most of our banks want to be first to go third. And what that really means is they want the confidence and the clarity that if they decide to move forward, they're not going to stub their toe. And many of them have just a trail of tears of the things that they've tried to implement or they've bought and been oversold and hasn't worked as expected. And they're just not confident buyers. And so a big part of the role that we try to play is de-risking and giving them that confidence that if they do this, I happen to be fortunate to be on Shane's cap table as an example, we know if we say you need to work with Shane to help you manage the risk in your commercial real estate portfolio, that he is going to significantly help them. And what we're trying to do is just accelerate their ability to make a decision, move forward, get the value from it, which then, when we do that successfully, reinforces our investment thesis, and the company ends up being worth more because they have more customers and more revenue, and it sort of has a virtuous cycle element to it at its best.
Just one back at you, then I'm gonna throw it to James. Can you give us a few examples of what they're asking for, innovation-wise?
Yes, I mean, right now, and some of this is perpetual, right now, not surprising probably to anybody in the room, they are desperately looking for new ways to generate deposits or retain deposits. So the environment, given the interest rate change and some of the issues in the banking system a year ago, the competitiveness of deposits is the highest it's been in any banker's lifetime. Probably goes back to the 1980s was the last time it was even close to this. And so customers, Treasury customers are looking for as much yield as they can possibly find in many cases. Even consumers that have historically been abused by banks and not paid much on their deposits are waking up and looking for alternatives. And so it's just a really competitive market. And if you're a bank that literally operates as, I have a cost of funds called deposits, and I make loans, and I try and operate my business on the margin in between that called a spread, if that's your only business, then you're really challenged in this environment. And the other thing, because of that, is they're desperate for new sources of revenue. If you're a Citibank or a substantial bank in this country, you might be at the point now where you have such diversified revenue that you could operate without making loans, which for a lot of people is almost incomprehensible that a bank could exist and not lend money. But there are enough other revenue streams out there for some. But for most of my banks, that's just so foreign that they need help in finding those new revenue streams to just diversify to continue to be viable as a business. So it's very much a business at our level in transformation in a big way.
James, is this what drove you away a little bit from the banking world and into finding new innovations? Or take us through a little bit what's innovative in your space, and also characterize like what's the European angle as well, since that's where majority of your LPs are.
I would say yes, certainly. Like the disillusion with what was available, what you could do in a regulated banking environment, certainly inspired me to leave. And so discovering fintech, discovering some of the solutions that were available there was pretty polarizing. I mean, today you look at someone like JP Morgan, the largest tech spend in financial services. I think they spend $10-12 billion a year on IT.
Just 17 billion as of last week. That's what they announced.
Okay. So I'm a Chase customer, but I can spin up a crypto wallet that has a stable coin that lives in the United States banking institution on my phone in 30 seconds with more functionality than JP Morgan Chase's online banking can. That's a horrible statement. Like what we've been socialized to believe is good financial services is just slightly above respectfully trash. It's just so, if you go to Latin America, if you go to any of the large Asian countries, if you go over to Europe, the banking systems, you can move money in a day. It takes us 3, 4, 5 days to move money. We think, oh, hey, Fed Now works 7 days a week now. That was implemented earlier this year. Yeah. I think people have been transacting on the weekends for quite some time now. So the fact that we just have this innovation today is kind of a testament to where we are as an industry. As far as the European angle, we invest in global entrepreneurs. So we invest in companies that are Delaware C Corps, we invest in companies that are based in the Cayman Islands, and we invest in a lot of European companies. We've invested in a few Latin American companies as well. So Europe happened to be a hub that was a bit friendlier to the digital asset world than the United States. But I guess on a positive angle, we had a Bitcoin ETF that was approved this year and an Ethereum ETF that was approved yesterday. So maybe the US will be a crypto financial center at some point.
Okay. Naveed, any crypto within your space at all? Is that even on an innovation sticky note somewhere?
So not getting into crypto, but really how do we actually utilize technology to meet the needs of real-time treasury, right? Like our clients are coming and telling us that they want to be able to measure and utilize the funds that they have available to them for their payments, for their markets, for their investments in real time. But the industry is really built on batch, right? Like even you can provide solutions through APIs, and that can give you some elements of APIs which allow you to do it in real time. But when the infrastructure is built on batch, that's when we started looking at how do we utilize blockchain. When you do a blockchain smart contract, that allows you to really measure the full flow from payment processing, payment details, payment identity, and payment confirmation. And you can do that on a token. And that's something that we launched earlier last year. And treasuries are using that for many use cases. If you're a logistical company going through the Panama Canal, you got to pay the port fee, you got to pay cleaning fee, you got to pay the logistical fee of actually putting containers onto the ship. And in a traditional process, it's a contract, and that contract gets executed once the ship has left the port. In this case, when it's a smart contract, you can actually measure through each element and get a confirmation, and it gets triggered. And that's done on a blockchain, and we have that live right now.
What else, when you say your customer, the client, like who is your customer that you are building for?
So we serve the largest corporations in the US. Name a name over here, and it's our customer because you have a treasury, and in that treasury, you've got to move funds, cross-border payments for their suppliers. Their employees need paychecks. Their employees have travel needs. They need corporate cards. So the large institutions, the Googles, the Amazons, the Shells of the world, the Aramcos, think about Qualcomm. We're in San Diego, so they're our customers. So large, all the top 500, Fortune 500 companies bank with Citi because we're available in 90 countries. And then you've got the financial institutions where we are actually settlement bank for them in many of the places, exotic markets where they cannot operate or don't have a banking license. And then the growth comes from commercial customers, like the new startups. So we are with the customer from the start of their startup journey, and we grow with them in the business. They might start with us in one market and one payment type, and then they grow their business, which goes across the globe, and we are actually growing with them with their needs.
Broad. Shane, your customer, primarily banks. Can you speak to kind of what's the gradient of that? And then let's talk a little bit about commercial real estate, the state of the market right now and how that's affecting kind of your world and the sale process of building the technology for your customer.
Yeah, I mean, we sell to banks that have commercial real estate portfolios. So we operate primarily with commercial real estate lenders. And I'd say most of our customers are large regional and national banks for obvious reasons. They have higher volumes. And our ROI is really around being able to take the volume of their portfolio and process it in a way that they can't manually, right? As well as on the origination side, which is not so great these days, right? In 23, everybody stopped lending. So we have two products. One's an origination product, and then I guess our hedge on that is the portfolio product, which all of a sudden became very popular because of all of the regulatory scrutiny that came with 23. So I'd say in all cases, traditionally we haven't been at the community bank level, which is why we partnered with BankTech Ventures. They're giving us a lot of visibility down to the smaller banks. But they're all being challenged, right? From the small guys to the big guys. 23 took a major hit, and budgets were cut, and a lot of these things, these IT budgets were slowed down. I'm starting to see that turnaround coming into Q1. We just had a great quarter. Spend started to open up at some of the larger institutions, but I have not seen that turnaround at the smaller community or even regional banks yet. So, how is that going to shift? We see an interest rate cut. Obviously, originations with commercial banks will start to open up and things will start to move. I think that's the next kind of big thing that needs to happen from a macro perspective. We need to see at least one interest rate cut this year, and then we anticipate, at least on our origination product, we'll start to sell again.
Carrie, are you investing anywhere in the PropTech commercial real estate area at all? Or what are you sitting on your hands right now in that area?
In that area, I would say we're largely wait and see. I mean, I think if all Shane had was origination, we probably would have waited, right? But because our banks are also working through portfolio optimization, risk management, that's a current issue that, to your point, they'll get back to it. If they know one thing, they know how to make commercial real estate loans.
It's the second largest asset class in the world, right? I mean, it's not going anywhere. I mean, certain assets within CRE are going to be in trouble for many, many years to come, office. But, you know, it's just a matter of time before things really shift. But in the meantime, like I said, you know, with every downturn, there's opportunity, right? The scrutiny from a regulator perspective is really helping us on one front. But I'd rather see the interest rates come down and get back to selling on revenue rather than selling on efficiency and such.
Yeah, and on that note, I mean, we made an investment in a company last year, and we actually just doubled down on it in the counter side of the credit cycle, which is delinquency, default, recovery, and really making that a much more efficient, automated process. And they're seeing interest from large banks like Citi, as well as even smaller financial institutions and even fintechs. And so these, particularly in lending, tend to have some cyclicality to them. And so our view is if we can help our banks navigate it safer, more efficiently, more cost effectively, they're going to come through the other side in a better place. And so I think the big one for us is revenue diversification. And then the other big driver right now is they're all really trying to get more efficient, because when their margin gets squeezed because cost of funds is higher on the deposit side, most of them are saying they still have pretty high significant loan demand. So they're not having a challenge finding the ability to make loans. It's just, you know, do the costs make sense to the borrower, and are they creditworthy at that price? But they're looking for, hey, how do we squeeze more efficiency out of what we have? And so that's leading them to be much more open to automation than they have historically been. And the other fascinating thing, how many of you have worked in a bank at some point in your career? We laughingly also say part of our job is to make banking cool again. And it's hard, you know, but there's a big issue in a lot of banks with aging workforce. And so part of why they're actually interested in automation is because they know, hey, we have a team of 3, 2 of them are going to retire in the next 3 years. We're going to have trouble recruiting new people to take that job. So we either need to eliminate the job with automation or make that job more interesting so the next generation will take it. And we talked about this recently when you were on my podcast, that you have to use much more modern tools and capabilities to even be able to attract people to want to come into the bank. And so that's now being realized as an impetus to implement some of the newer solutions.
There's one thing that I'll add over here. Look, while we might never get to a state where banks don't loan out stuff, one thing which is very key to us from a treasury point of view is that we have a lot of data onto our clients, right? There's a lot of insights, and everyone knows the challenges that we had around supply chain finance issues during COVID. What we see with a lot of our large clients is that they have a lot of suppliers that need capital financing. And we can actually offer them letter of credits because of the incomings and the outgoings that we see from an insight perspective. So it makes it much easier for our clients to onboard their suppliers with Citi and then be able to do financing for them in that way, which then makes their business efficient rather than going outside and looking at financing for their suppliers as well. So that's how our working capital trade portfolio, which is optimized through our single platform, and makes it easier as part of that solution.
If I can here, I think all the things that these guys are alluding to, or not even alluding to, they're just talking about firsthand, is really what gets me excited about what some things that people are building in the digital asset space. And so along with how they can see the entire the financial supply chain for you said equipment finance or working capital finance as they're onboarded to Citi, we can create better financial products if time to market is reduced. So we invested in a company that does securitization. So typical securitization takes what, 90 days? Is that a fair guess? Or longer. And so if you have a credit card loan that's outstanding for 30 days, it doesn't really make sense to, securitize that. With speed to market, you're able to change that. You're not only able to make the pie more efficient, you're able to make the pie bigger. So if we could create financial products that were more efficient, that didn't take 3 days to close, that didn't take 90 days to assemble, there's really an opportunity to make this a better market globally and really for everybody. You can make credit cheaper, you can create more fee income for banks. It's a win-win. And it's going to come through technology.
I was waiting for our AI moment. Maybe this is creeping in here. Do you want to kind of kick us off on just like how you're using it? Is it an internal thing or is it a outward-facing tool that you're effectively using it now?
So we've been using AI in the company even before ChatGPT and Gen AI was talked about, because you have to have some sort of intelligence to be able to have the insights that you're giving back to the customers. So there are versions of ChatGPT that are being utilized internally for operational efficiency that we're utilizing around our service centers as well as customer support. We're looking at RPA processes internally for large documents that we need to swift through to be able to do KYC for our customers and pre-fill that as much as we can. There are opportunities in which we are looking in replying back to customers with product solutions. So there are multiple places that we're using both AI and Gen AI, but it's not a kind of like an alien term to us in the company. And we're adopting it head on so that we can actually be the most intelligent bank with a soul for our customers.
As opposed to where you had to turn it off for a customer, right, Shane?
That is true. Yeah, we were asked to turn off a piece of our AI by a very large bank. But yeah, I mean, there's people that, especially on the CRE side, that really just aren't very technical. They don't really understand AI and kind of the parameters that you can put around it. Most people understand ChatGPT and that's it, right? And what that is and how public it is, right? So obviously it would be for a bank, if that's all they understand, or the people in the bank, that's all they understand, it'd be very scary to say, we're using ChatGPT, right? You can't throw all of this information about clients out into a public forum and then get information back. So yeah, I mean, it's so early, and there's so much that the layman still needs to understand to get to a place where people are comfortable, especially in the banking space. And I think there's some banks that are much more sophisticated. I mean, Citi is definitely one of them, and there's still a lot that needs to work through. Again, this goes back to culture. Work through the culture to get to a place where they're going to adopt AI, not just AI, but just innovation in general. So,
yeah, the big topic, I think, there's a curiosity, of course. Some of our companies are using some kind of intelligence, generally probably more machine learning than anything, and just that's a step forward, because if you think about the proliferation of software in the last several decades, most of that has not been closed loop. It's just been some sort of dumb process automation, and just closing that loop and allowing it to learn and get better over time is a huge leap forward. So there's a lot of opportunities to just build that in and replace a lot of dumb software, where they're really trying to both develop governance. How are we going to let people test it? Generally, it's internally. How do we then explain that? People that have been on the front edge, a bank friend of mine that really tried to do a lot early on when ChatGPT first got released, they were doing only experiments, only internal. They had a governance group. Everything was documented, and the regulators came in and said, stop. And that doesn't do good things for moving them to more efficient, better customer experiences. So there's a tension there, and it's not like the regulators actually know. They're just told from above, stop. So if you see AI in a vendor's domain name, ask a bunch of questions and make sure that the bank can explain it. So we talk a lot about explainable AI, that if you're going to use it within your bank, you better expect you're going to be asked, and you better know how to explain in layman's terms how it works, because the regulator probably is going to know meaningfully less about it than you probably do.
The funny thing is that all of the startups are being told by their investors to say, where's the AI? Make sure you market it as AI. There, and this is for you all out there, 90% of these companies have zero AI, much like yours. Nothing. It's just it's a marketing thing. So you got on one side these startups saying, yeah, we have AI, and then the regulators are saying, don't buy AI.
And then you got to educate these regulators every 6 months because they keep changing, right? Like you're back to square one, as we were talking earlier, and that by itself is a challenge, right? If you have a company with the domain name .ai, your internal IT department doesn't even let that email go through. That's how much scrutiny at times is given to AI, not because they don't want to, because the regulator asks them not to do so.
I mean, if there was an industry that was harmed by buzzword, it would crypto and blockchain has, been affected by people being scared of just the word. Just much as investors see AI deck, you're like, lofty valuation, and is it really AI? Like, how do you meet the rubber where it hits the road on crypto in that regard? Like to see real application around that.
I mean, to say that it wasn't represented by horrible representatives is another huge part. Like when the leaders of your industry are going to prison, that's not a testament to let us in, and so I think as an industry it needs to grow up, and it's at a nice inflection point where we're starting to see that, but still very much early days. So your question was about how we get people comfortable with this technology. It's education. I thought, being a fund manager, you would sit behind a desk and you would either trade or make investments or, build Excel models all day, and I'm more of a teacher than anything else. So it's sitting with our investors, it's sitting with customers of the protocols or the companies that we've invested in, and explaining why this technology isn't black magic and why it might be better than kind of the status quo. But that's a painful process. I mean, we've had some really nice openings with Standard Chartered in London is a great example of a large financial institution who said, okay, like we have to take a serious look at this. HSBC in Hong Kong is another one. I think I can't speak from a U.S. banking regulator standpoint, or that was a life of mine a few years ago, but it's very challenging here. I think the regulators putting this stopgap on, you have AI in your domain name, like we don't want the product, I think is kind of the antithesis to innovation. I mean, like if we're not using AI as a fund, we're so far behind our competitors. I mean, we've been using AI agents, we call them bots. We built AI agents years ago. We use them for everything because it makes everything better. It's no longer do we want to be tech and trendy and fun and cool. Like this is a business decision. Like we just make more money by buying more SaaS versus hiring more people. And excited to see how that changes in the near future.
I mean, one area that we're trying to experiment internally, and I saw a bunch of hands go up when they said we had investors in the room. So invest in these current companies, which is to fix one industry-wide problem in the banking industry is KYC. Being able to have an optimized way of fixing KYC issues, renewals for KYC, structured and unstructured documents that are actually submitted in a physical bank, and then you have to OCR them to be able to make sure that the client is still the client that you know about. That's an area that we're hoping that AI will be able to help us, and Gen AI can actually be able to give us some large language models that we can actually run through and sift through that data faster and pre-fill it as much as we can. So if you have ideas, go invest in that area.
We do that. I mean,
And as I said, we'll get you onboarded 45 days.
There we go. We're going to check back in 45 days with this panel. Anyone want a hot take they want to leave the audience with through the rest of the day?
By the way, do we have time to ask questions or not?
Ooh, I don't think so. I think we
got one.
Yeah?
I just saw 2 minutes.
2 minutes?
Go for it, Peter.
Yeah, jump in here.
Thanks, I appreciate it. So, you talk about AI, you talk about crypto and the whole thing with Bitcoin and debt, everything, blockchain. So I'm looking up and going, two main guys in the whole blockchain, in the whole Bitcoin world, they went to jail. What's going on is Bitcoin's at all-time high, Ethereum's at all-time high, Solana was through the roof. FTX, if there's ever an example, stole $10 billion. Investors could get paid back 2x easily. They won't, because other people will take it, but they'll get paid back. So is this the moment where, as Fred Wilson had talked about, is this the time that this sort of digital capability of the Bitcoin, the blockchain, is now legitimized in spite of all those other issues, because it's never been better?
Or is Jamie Dimon supporting it?
Look, I'll do two in one. So my hot take here is that, and we'll answer your question, is that I think that if community banks and regional banks actually, adopted and came into crypto and looked at crypto with open arms, that might actually save their business. A lot of these businesses are taking, Jamie Dimon's words as gospel, and that Bitcoin is bad, crypto is bad, it's un-American to like digital assets, and they'll do that to their detriment. I mean, look at how many community banks and regional banks are sold every year, and guess who's getting bigger? JP Morgan's getting bigger. I don't think there has been a better time to invest in digital asset startups. I'd probably like to lose the word crypto, but yeah, no, it helps that the market is booming, and if you think about it, it's still really nascent. It's still, the entire market is still smaller than the market cap of NVIDIA. So you aren't too late. This is still an early market. Yeah, there's been a lot of, centimillionaires minted because they did some goofy thing on the internet 5 years ago, but I think this is where, it'll be ubiquitous with technology, and in a few years, it'll be ubiquitous with financial services, and we'll just deliver a better product.
One thing I'll add to that one is sovereign states are actually looking into this from a regulation point of view. If you haven't had a chance, take a look at central bank digital currency for the country of Bahamas. They now use that as a way in which their government entities are paid with each other through a central digital currency that they've launched. So while it's not across geographies, but within their sovereign state, they're utilizing that as an experiment. And more countries that we get out there, more sovereign states actually start doing this, the easier it'll get from a regulation point of view. Unless and until it's regulated, you cannot have this seen as a mainstream way of paying people, using it as a currency or assets stored in a regulated environment.
Yeah, and the challenge we've seen, at least with our banks, is we had several that were really going down that path, and then all of a sudden they just got a wall put in front of them and told, no, you cannot do this, right? And so that's the one challenge here is there's this schizophrenia. Maybe we're seeing a little bit of thawing, but a number of them, again, under that, they want to be first to go third until a couple people are successful getting through to the other side, because there are ones that were starting to offer it as even Bitcoin as a store of value within the bank. Now all of a sudden they had to shut it down completely, and so it'll take a little while to restart any of those types of activities. So I'm hopeful, because I agree with you that I think several of them need to play more in that. They just have stubbed their toe so far.
Well, thank you guys. Love the discussion. Hope you guys enjoyed it too. We're gonna have to stop it from there. I'm sure you guys will stay for a little bit out in the hallway if maybe a few questions. Appreciate you guys' time. Let's give a hand for our panel.